Greetings, members one and all of the Salivation Nation, coming to you on this Boxing Day. And if you ever felt like you were boxed in by the markets, well, you might want to pay attention to this story because just as we saw some history being made on Christmas Eve, well, the day after Christmas, we're also seeing history made in the other direction. The headline from the Washington Post says the Dow soars more than 1,050 points, its biggest point gain in history. Yes, you read that right. From the Washington Post, this is the biggest point gain in the Dow's history, recovering from days of losses. Wow, interesting indeed. Stocks on Wednesday climbed back from their epic Christmas Eve plunge as all three indexes posted big gains. The Dow Jones Industrial Average roared more than 1,050 points in late afternoon, the biggest point gain in history, as stocks snapped a 4-day losing streak that had placed a 10-year bull market on the edge of death on Monday. Wednesday's preliminary 4.96% climb in the S&P is the best December 26th on record, replacing the 3.06% gain record set in 1973. It was the largest daily percentage gain for the market since March 2009. Today, the market's message is that we have nothing to fear but fear itself, said Ed Yardeni, president of Yardeni Research. The recent sell-off reflects fears of an impending recession, which were blown away today by Amazon and other retailers reporting a record holiday selling season. Santa is back. White House economic advisor Kevin Hassett tried to bring some calm to the markets earlier Wednesday when he assured reporters that Federal Reserve Chairman Jerome H. Powell's job is 100% safe. The market started surging after his remarks. Yes, of course, 100%, said Hassett, the chairman of the President's Council of Economic Advisors, when asked by reporters at the White House if Powell's job is safe. Absolutely. So there you go. And that is sort of an indicator, and sadly so, that we live and die by the Fed. So in other words, if for some reason, and I don't even know that Trump has the authority, there's some debate to that, but my guess is he probably doesn't, but I don't know. Not that he was even thinking about it. I think a lot of this stuff is just rumor, the rumor mill funneling through the news, and a lot of it fake news, as we have come to know. But nonetheless, it's a shame in a way that whatever a federal chairman, whatever they say, and whatever the Fed does, that the markets react. So we live and die by the Fed, it seems, these days. And it really shouldn't be that way. We should live and die by natural market indicators. But nonetheless, there's where it is here. It goes on to say that Hassett, in an appearance on Fox Business Network, also said President Trump is very happy with Treasury Secretary Steven Mnuchin. Mnuchin created worry last weekend when he phoned the chief executives of 6 U.S. banks regarding the economy. President Trump's criticism of the Fed and Powell has shaken Wall Street as it weathers its worst December in history. And I'll note, too, that that the Fed, I don't believe the Fed should have raised the interest rates this time. Although, however, as we have seen in recent weeks and, well, even more than a year or so, these rate hikes are sort of baked in. It comes to an expectation based off of indicators from the Fed and the like. So the markets have already kind of reacted to that beforehand. A lot of the market movement, I believe, was from statements that Powell said. Basically, everybody thought he was going to come back and say, we're going to keep an eye on the interest rates and probably won't be raising anymore and not make any new promises. But essentially, he came out with a very hawkish statement, and that made the markets nervous because that means that the Fed's raising an interest rate essentially is a way to, number one, stave off inflation. That's the goal. That's one of the things. But also, in doing so, making lending more expensive, which stifles the economy. It softens the economy a bit. And that's something that people, there's a time to do that and a time not to do that. And with the markets being the way they are, volatile, it's not a time to continue hawkish statements like that, most of its critics say. Going on with the article, it says the Dow was whirling between slightly negative to 200 points up in the first hours of Wednesday's session before its early afternoon lift on the tails of surging blue chips Apple, Home Depot, Microsoft, Visa, and Nike. Facebook and Amazon shares were up more than 6% each. All three major indexes were on pace to snap a 4-day losing streak. The S&P 500 and technology-heavy Nasdaq Composite also bounced. The Nasdaq was up more than 5%. The S&P posted a nearly 5% pop by closing. Also, it should be noted that this is where the tie-in to gold and silver, because we want to pay attention to that and see how those react. Because I think you're going to be surprised at what gold and silver did or didn't do today based off of this news. Crude oil prices surged, posting their biggest increase in 2 years after a 30% plus drop since October. West Texas Intermediate crude was up nearly 10% at around $46 per barrel. Benchmark Brent crude increased more than 8.5% to more than $54 per barrel. The post-holiday rally comes after a shortened Christmas Eve trading session left the Nasdaq deep into correction territory and the S&P within a wisp of a correction. The near-decade-long bull market that began in March 2009 earned a reprieve on Wednesday's rally. Consumer discretionary energy and technology were leading the way. President Trump tried to create his own White House rally on Christmas Day when he suggested that the pullback in U.S. stock markets is a good buying opportunity for investors. I can vouch for that because there were some of my viewers, at least one that I know of, that was going to take advantage of these low prices. Maybe he did. I hope he did at the right time and is doing well because of it. We have companies, the greatest in the world, and they're doing really well, Trump told reporters at the White House. They have record kinds of numbers, so I think it's a tremendous opportunity to buy, really a great opportunity to buy. All three major indexes, the Dow, S&P, and Nasdaq, finished down 2% or more on Christmas Eve. The Dow closed down 653 points. 10 of the S&P's 11 sectors are in correction coming into Wednesday, although all were higher in early trades. A correction is generally defined as a 20% retreat off recent highs. The Dow's 30 blue chips are close behind, down 4,034 points in December, about 13.63%, and nearly 5,000 points off its September high. The composite of some of America's most important companies is on track for its worst month since 1998. And investors have been shaken by recent economic and political developments, including the abrupt resignation of Secretary Jim Mattis, Defense Secretary, a partial federal government shutdown, an interest rate hike, speculation that Trump might seek to fire Powell, Mnuchin calls for U.S. banks, and Trump's sudden decision to withdraw troops from Syria against the Council of National Security Team. So there's a lot of uncertainty there. The market doesn't like uncertainty, and that's understandable. But some saw Wednesday's rally as digesting Mnuchin's call to bankers. So, it's that calm. And so maybe what Mnuchin did was the right thing, even though its perception at the beginning of it, if you have to do that, and people are suggesting that, then that means something's brewing. If you don't know, if you can't sense that, if you have to call them. But nonetheless, it's an unwind of Monday's reaction to Mnuchin's unexpected phone call, said Simon Hyman, a global investment strategist at ProShares. I wouldn't take anything else from it. If you have net today and Monday out, it doesn't tell you anything new. The president on Christmas Day cast fresh doubt on the record of Powell, whom he increasingly blamed for market weakness. Well, we'll see, the president said when a journalist asked whether he had confidence in Powell. They're raising interest rates too fast. That's my opinion, but I certainly have confidence. I think that they will get it pretty soon. I really do. Presidents are rarely happy with interest rate increases, but Trump's vocal criticism of Powell has Wall Street concerned. Markets are becoming more rattled by the criticism of the Fed, said Christina Hooper, Invesco's chief global market strategist. The Fed instilled confidence despite the global financial crisis and government shutdowns. So while there is a minority view that stocks would rally if Powell were to be replaced, I believe it would cause a serious sell-off because of what it represents. Having said that, Hooper said, the Fed would be more flexible regarding balance sheets normalizations given how powerful a tool it is. So with that being said, it just goes to show you the markets. There's a lot of psychology in the markets. Generally, everybody wants to do well. Everybody wants the markets to do well. But there is that fear index that can creep in. And I believe if we would have continued to see a downward rally, it would have just gotten worse, no matter how positive people want it to be. I think a lot of the news today that we saw is causing things to turn around. Here's a market now. It's back over, almost back up to 23. Now the high was, obviously, the high was at 26, so it's still much further down than what the high was. That 26,000 earlier in the year, these record highs. So it's got a long ways to go up, and this is the biggest gain. And notwithstanding, this brings us to gold and silver prices. They're not reacting with the markets today. They're having a wait-and-see attitude. In fact, silver is actually up 1.7% to over $15 an ounce now. So silver's really reacting. Gold is down today, 0.28%, just over $3. But the surprise is obviously silver, and platinum is over $800 now. It's climbed up, and palladium is up now to just now above gold again. So gold is really one. It's a very tepid movement, but the metals themselves are having a wait and see attitude. And really, I myself personally am having a wait and see attitude on these markets. Just because we had the largest gain in recovery today doesn't mean that tomorrow won't be something completely different. We could have another massive fall, and my guess is the markets are going to fall as much as they did over the last couple of days before this big recovery. But nonetheless, it's interesting to see how the markets are. It's a volatile market. Today doesn't change it. It just further expresses where we're at. Still a lot of uncertainty out there. And what wasn't mentioned in that article is the trade deals, working out these trade deals. What is Congress going to do? What are the details of the USMCA? What's going on with China? What's going on with the Eurozone? Those types of things. Until we really get concrete movement there and to see where things are set in stone, I believe we're going to be in for a volatile ride. And I believe the precious metal prices are going to reflect as such. I believe 2019, we're going to see them continue to rise at some level, but I think we're done with the lows. That's just my opinion. Others disagree with me. Post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching. I hope you all had a very Merry Christmas, and encourage you to please rate, comment, and subscribe.